Great. First of all, thank you for having me here. So we are basically building cloud energy storage in the country right now. I think energy storage is a very clear problem for a lot of stakeholders. In India, it is becoming a very pressing problem now because our renewable sector is growing very aggressively. Today, we have around 120 gigawatt of solar energy production capacity in the country, which is set to grow to around 175 gigawatt by the end of this year itself. Basically, today, around 20% of our power is coming through solar and wind, and it is set to grow to around 75% of our energy mix, which means around 500 gigawatt of power will be coming through solar and wind. Now, the thing is that a lot of this capacity is going to waste because we don't have any physical energy storage infrastructure in the country, and majority of our energy storage infrastructure needs are short duration. So a lot of infrastructure projects are failing to prove their financial feasibility in the country because of their limited utilization. What it is causing is that around 30 to 40% energy loss occurs to renewable power developers in the country, and utilities also suffer up to 10% transmission and distribution loss due to the lack of energy storage infrastructure in the country. Now, when it comes to India, India is the third largest energy market globally. Our current requirement is around 20 gigawatt hour. Our installed capacity is less than 1 gigawatt hour. Currently, the addressable market is around $2 billion, but it is set to grow alongside renewables, which means that it is a $26 billion opportunity by 2030, by when we'll need around 260 gigawatt hour in the country. Now, our solution is that since majority of our energy storage requirement is short duration, instead of building dedicated infrastructure, we are aggregating idle battery capacity connected onto the grid and creating a cloud energy storage system for renewable developers and utilities in the country, which basically means that there is going to be a virtual on-demand and pay-per-use option for these power enterprises where they could potentially make 2.5 to 3x of cost benefit on this added expense by saving their wasted energy. Now, in India, it's a very interesting time to do this because recently OTC platforms have been authorized in the country. Not only they have been authorized in the country, they are also protected from the incumbents in the space, which are Gencos, power trading exchanges, IPPs, Discoms, Transcos. So none of these guys are allowed to really open up over-the-counter platforms for providing on-the-spot services, whether it is buy, sell, or store, to any of the clients in the country, whether it's a CNI customer, whether it's a large-scale consumer, whether it's a state. So none of the incumbents in the power sector are really allowed to operate OTC platforms in the country, which basically creates a very strong protective mode from the regulatory side itself for players like us. Now, our revenue model is straightforward. We are basically aggregating battery capacity connected to the grid, making it bidirectional, and we are basically providing a warehousing proposition to power enterprises. The way India's business environment is configured, we have around 60 to 65 enterprises engaged in the business of solar and wind power production. We have 4 private major utilities. So essentially, these are the people who are at the knife's edge, who are facing the problem because of lack of energy storage infrastructure. And we are basically providing them access to this network of batteries and making them and charging them on a pay-per-use basis based on their space consumed, time that they have spent in the network, and their urgency. Typically, the seed price point is $100 per kilowatt per year. In addition to this, we have built a very comprehensive software platform so that we can also promote battery capacity in the electric mobility sector in the country. We have a lot of 2 and 3 wheelers which are growing in the country, and there is a requirement of value-added services for the supply chain in automotive as well as electricity side to build that infrastructure overall in electric mobility in the country. So we have also built a very comprehensive software platform to integrate battery manufacturers, battery financiers, and battery distributors onto a single platform. This is also generating revenue for us, but the core idea is to build a cloud energy storage system which we can scale globally, because this is not just a problem for India. There's a very fundamental problem that majority of the storage requirement is essentially just caching energy for short duration and releasing it later at night. So I think broadly, just to explain how exactly the product works, is essentially we are a warehouse for power enterprises to store energy. Energy logistics is the problem of the customer. And the customer is people like Amazon Power, Azure Power, Renew Power, people who are producing solar and wind energy, or utilities. Both these customers have the capability of moving electricity around on the grid with the help of their open access licenses. What they essentially need is to locate intermittent battery capacity, which is coming online onto the grid and is available for short duration energy storage function. So essentially, we have just integrated the entire protocol stack of battery management with the open access of the grid.
Time is up, Ankit. I'm sorry. That was either way, an awesome pitch and an awesome company doing something super interesting and meaningful. I'm gonna bring in our other investors here. Yes. And then hand things over to them. Laura, Daniel, Moritz, do you have questions to kick things off that you want to ask Ankit? Including perhaps Ankit, how much are you raising and what round is this? Just as a quick one.
So we are raising our Series A. We are already operating at a $2.5 million ARR. We are growing around 30% month over month. We have around 6,000 batteries in the network. We basically want to now build technology to integrate this bi-directional tech with electric vehicles, broadly electric buses and passenger four-wheelers. And that is why we are looking for raising this 10 million series is to basically expand our capability to aggregate more resources on the grid.
Okay, good question. So what is the biggest challenge you face at the moment, besides maybe closing the round, raising capital, but you need to overcome?
So I think in India, we are still playing catch up with the capacity that is coming into the market. So basically, electric mobility is not very widespread. There's not widespread adoption of electric mobility right now in the country. But the thing is that it is important to bring this technology right now itself because the margins in India are very thin. So essentially, you have to integrate as many revenue streams as much possible to accelerate the adoption. So essentially, we have to go hand in hand with electric mobility at least for a couple of years while we are scaling this technology. So the idea is the core reason why I reached out to Matt and I'm featuring on the show is that we want to expand globally, want to build partners overseas as well, because the core proposition is essentially software.
And I'm very glad you did reach out. It is an incredibly, incredibly interesting company. That said, do you foresee challenges? So in my opinion, you have strong local network effects, but internationally, you won't have network effects. This isn't Airbnb where I go travel somewhere else and it's great because there's an Airbnb there. It's Uber and anybody can come in and start a competitor in a local geography. How do you grow and scale effectively with a business model like that?
So we are focusing only on being a technology platform. We strongly understand that in geographies like US and Europe, regulators themselves are creating more equitable participation of everyone who has some kind of distributed energy resources. So it can be a telecom company who has idle battery capacity at their telecom towers. And the regulator is making easy for those businesses to enter into demand response schemes and participation on the grid. So essentially what they need is the technology to be able to do so and do that directly. So in geographies like US and Europe, what we want to do is provide this capability, whoever has the battery resources or distributed energy resources with them, so that they can monetize with the help of this and increase their adoption. So essentially our idea is just to make this software layer, which can help renewable scale and also electric mobility scale. So it's just a scalability platform that we are giving to our partners. So that's the core network effect that we're looking for. The more we operate, the more data we gather, the more accurate prediction of stability on this platform we can, the more better supply and demand matching we can do.
I have one question, Sheru. Let's say you get the funding. How much do you distribute into the hardware and how much in the software development?
So I come from a robotics background. I was a robotics engineer prior to this. We strongly understand that in these kind of spaces, the hardware commoditizes really fast. So we are just focusing on solving the key integration problems. We are not going full-blown into developing new hardware from scratch. There is a lot of hardware available, which just needs to be integrated with the protocol stack. So largely our expenses towards setting up the lab in India, we don't have enough resources in India. So we have to set up our own lab. We have to set up our own simulated environment to be able to demonstrate this as a capability to the utilities. I mean, in India, this capability of distributed energy resources is very far. It's very, I would say, it's a very new concept for everyone, right? It's totally new for everyone. So we have to create those simulated environments so that they can imagine it. So largely the expense will be going towards building the software and doing pilots with enterprises to get that initial scale with them.
Great, because that would be important to me that you put most of your resources of the funding into developing your product, your USP, however you want to call it, and not allocate too much into the batteries.
Yes.
Exactly. And then maybe a last question. I saw on LinkedIn you already have 60 plus employees. Like, how does the round fit to your company size? It's just a little bit, it sticks out. Let's put it that way. Yeah.
So we basically have grown around 50x in the last 12 months. I mean, if we were doing, today we are doing $2.5 million of ARR. Just 12 months back, we were doing very small amounts, 50x less than that. So far, we have been very capital efficient in terms of identifying the key bottlenecks, key things that have to be developed, and growing the business more and more with the help of minimum development. So majority of these 60 guys that we have, it's a good mix of non-tech and tech people. It's not only the technical guys, we also have a lot of non-tech guys in the team who are sort of propagating this concept across, whether by tying up with enterprises, by stakeholders, by research, by advocacy, whatever means. So largely this round size is now to sort of build credibility in the market so that larger enterprises feel safer working with us. When it comes to utilities, they're going to probably use this for multi-megawatts. And they need that we are going to stick around if they are going to give us a 10-year contract. They are happy to give us a 10-year contract, but they want to know that are we sticking around or not, right? So I think in certain sense, this round is not at a very fundamental level. It gives us credibility that we are here to stay and we are thinking long. We are not just thinking from short-term trends in the market. We are looking at it from a long-term perspective and working our way backwards.
Cool, thank you.
And I'm curious what you're looking for in your investors from this round, and then also what geographies you're thinking about expanding into first beyond India.
Right now, primarily we are looking for those investors who can help us open the demand side in the energy space. So in a lot of markets, it's very difficult to sort of tie up with these incumbents, especially since majority of the demand side of energy storage is still controlled by utilities. It's not completely deregulated in a lot of enterprises, in a lot of geographies also. So in that sense, it is important that we go via the investor route. They help us connect to the utilities, the energy majors, so that the demand side is opened up for us. Once we have the demand side sorted, then we can simply start extending our software platform to whoever has distributed energy resources on the grid. Right. So I think that's what we're primarily looking for in terms of our investors. In terms of the geography, we would want to start very small at an island level. And I think I would probably love to start it in Europe, some of the maybe in Philippines, those kind of territories where we can do a very small islanding pilot. And the regulatory environment is also very favorable towards distributed energy resources because of the fundamental nature of energy mix in these geographies, right? So I think when scaling up next to India, first, I would not like to invite a lot of challenge. First, I would just like to expose my technology to those nuances, commercial nuances of overseas, and see how basically what all we have to do in terms of making it more robust so that we can handle the certifications and compliances of Europe and US. I mean, in India, we don't even know what it is. So we are not facing as much burden of compliances and certifications, but in US and Europe, we'll get to see a lot of compliances and certifications. Yeah.
Maybe a quick question on how's the competition in India? How fast can you grow this year?
So in India, we are the first startup doing this. There is no one remotely close to this in India doing this. So we basically first started aggregating battery swapping stations in the country. We saw that battery swapping stations were growing because of many macros in the country's economy. We are a big BOP economy. We have a lot of 2 and 3 wheelers. We have very crunched out infrastructure. So battery swapping is growing very fast. So we are primarily piggybacking on that in India. So in India, we can continue growing. But in basically in India, our next step is that we lock in the supply side. Because there are only 4 or 5 guys that we have to lock in to acquire the entire supply. In passenger 4-wheelers, we have only 2 OEMs who predominantly control the entire market. Then we have only 4 OEMs who control the entire electric bus market in the country. So right now, my idea is that first, we should just integrate our bidirectional charging tech with their products, with their vehicles, before their supply chains get set. Once their supply chains get set, then there's a very high resistance from OEMs to sort of shift to a new technology. So first we want to just lock in that supply. And then we can simply start integrating with the demand one by one. So we just have to integrate with 3 private utilities in the country and top 8 independent power producers in the country. All in all, 11, 12 enterprises that can give us around 70 to 80% market share in the longer run, because these guys control large part of the market. The business environment is highly lopsided in the country. So that's how we are thinking, that we should just lock in the demand, lock in the supply. And then as the supply comes into the market, of course, we'll grab the largest market share, but both the sites need to be locked in. Then we'll start moving to other geographies and start doing the same thing over there as well.
Sounds like an easy ride.
No.
Yeah, very interesting business case. From my side, as a recommendation, I probably would stick to India first and try to build out my market power right there and learn more. And then, of course, also get a better or good interpretation of European and US markets, as there are a lot of companies also, I think, in a much heavier competition at the moment.
Yes.
Why not just own Asia and Southeast Asia, where there is a much stronger, the cultures, the way vehicles are used, the way cities are laid out, it's all much stronger. You're going to have less competition. You're going to have lots of funding, and you're going to have a lot more inbredness with the energy providers. Why not just take over all of Asia and Southeast Asia?
So in terms of growth and scale up plans, that's what the idea is. First, we want to stick to India, lock in, scale up in India, and start capturing the neighboring economies. But the idea is that out here in Asia, the energy side regulations are still evolving. And while they are evolving, we need to expose our technology to some country which has the deregulation in the energy side at a very advanced stage. This can be purely a pilot also in Europe, purely a pilot in US, but maybe not more than that at all. But that's the only thing that we want to just sort of seed somewhere in US or Europe to keep our technology on its forefront. Otherwise, what we end up doing is we just start customizing to one specific geography, and the solution becomes very customized to India. Then we would find it very difficult to get out of India, even for emerging economies. Yeah.
What about Singapore? You would have all of those characteristics as well, wouldn't you?
Yes. So Singapore, Japan, these are two geographies where this can be tried out. And I'm speaking to some guys over there. But I think in these geographies, the turnaround time is also very high, since the compliance and certification level is also to a next extreme. I mean, we have to do a lot of compliances to get into Japan. Yeah.
Understood. Any other questions? Go ahead.
But I mean, we have just raised $1.6 million so far. So, I mean, we have to be very capital efficient in this way, taking decisions very cautiously. I mean, climate tech is still growing in India. It's a very evolved scheme out there in US and Europe, but in India, it's still growing.